everyone, here's Unzilla Talk Finance. This week, we have the Federal Reserve's Open Market Committee held their first policy meeting on this Wednesday. So they made their decision that they will leave the interest rate unchanged, which will make the Federal Reserve fund rate under the benchmark of 5.25 to 5.5%. So at the same time, the Federal Reserve will continue to reducing the security holdings. And as we know, during the last 2 years, the Federal Reserve has been fighting with a historically high inflation, and they raised the interest rate to current level. At the same time, they reduced the security holdings more than $1.3 billion. So we know the Federal Reserve making their decisions from meeting to meeting, and they are very highly committed to bring the inflation back to 2% long-term goals. At the same time, to maintain their dual mandate, which is to promote the maximum job employment, at the same time to restoring the price stability. So according to the chairman of Federal Reserve, they will make their decision, and if the economy is under their expectation and the economy evolves as expected, the Federal Reserve will probably starting to moving back the policy restraint in some time during this year. At the same time, he also mentions that if the Federal Reserve cuts the interest rate too much or too soon, the result will be reversal to the current monetary policy, and they will probably ultimately to bring more tightening policy. At the same time, if the Federal Reserve cuts the interest rate too late and too little, that probably will also weaken the U.S. economy. So the Federal Reserve will probably make the decision according to their own timeline once they really see some clear evidence that the inflation is going down to 2% goal. So they probably will make their decision in their May policy meeting or March policy meeting. So let's see what will the Federal Reserve's next move in their next meeting. So they also mentioned that they will keep reviewing the economic data at the same time.